Okay, welcome everybody to this evening's ACY webinar, live Forex market review. So we're going to get into live charts at the moment. So before we do, you can read through the disclaimer. If you're in our YouTube live chat, I cannot see the chat. So if you want to chat to us, just come into the webinar. I'm giving you the link there in the chat. For those in the webinar, if you have any questions, just use the chat or the question and answer box. So please read through the disclaimer before we move along. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities, and I'm a full-time Forex trader. I've been trading in the market now for more than 15 years and mentoring clients for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. If you want to connect with me through the week, then my analysis you can find on our website, acy.com, market news tab. It'll be on our ACY Securities Australia YouTube channel there. And you can connect me on Twitter and LinkedIn if you want as well, on my handles there. And in our Telegram chat room. If you want to get access to that, just contact Nathan. He's going to be away a couple of days, but his email's on screen there, nathan.bray @acy.com. I'll put his details in the chat in a moment. If you want to get access to my chart layouts and templates for MT4, then he's the man to contact too. He'll set you up. And any questions about maybe setting up a demo account, if you want to practice trading or even set up a live account, then contact Nathan. He'll help you out. So I'll just put that in the chat for you. Here we go. All right. So, other thing I just want to talk about is next week. We usually do this on a Monday, but the Inner Circle webinar, which is normally open just to clients, where you can get on the mic and talk to me and Nathan if you want, but generally it's an opportunity to talk to myself about your trading and ask me any questions. I know we go through something at the beginning. So what we're going to do this week is not going to be on a Monday, it's going to be on a Wednesday, the 19th. And what we're going to do is from the webinar at 7 p.m, we're just going to head into a new webinar at 8 p.m. and anybody in the webinar at 7 p.m. can just hustle along and join us. All right. If you're a client, Nathan will be deciding who can jump on the mic and have a chat. But what I'm going to be doing as well is for the first 20 minutes or so, I'm just going to touch base on a new strategy I wanted to introduce for you to be able to trade, or at least, forward test and see whether you like it. And using some of the stuff I've already taught, but just putting it together. It's going to be called the 1 hour momentum trade. And just showing you a chart here. So it's all based on the 1 hour chart in theory. And you can move to a 50-minute chart to look for the final entry point, but it's going to be based on a 1 hour chart trading momentum. And I'll show you how it all looks. And if it takes 30 minutes, 40 minutes, doesn't really matter. It's going to be an introduction to this, and this may be coming up in some future webinars. But then after that, we'll have people on the mic talking, and it's just a good way to get together and discuss trading. So that's going to be happening on Wednesday at 8 p.m. following the 7 p.m. webinar. So I'll have a link for the secondary webinar on the day, but you can obviously contact Nathan, and he will be able to provide you a link as well. Okay, so that's what's coming up on Wednesday. 2 webinars on Wednesday, back to back. So with that in mind, something to look forward to. This will be very rules-based in general terms. So if you can follow a set of rules, you can start to forward test it and see how you go. Now, let's just get to the news. Now, of course, with the CPI data come out yesterday, and, the CPI data, I don't know, the US dollar's obviously declining. But I didn't think the data was that negative in true reality. And And let me just get to the right day. So I just want to go back one day. Why won't this thing just do what I want? 13th. All right, here we go. So CPI data came out and it was fractionally lower, but CPI is actually still up. I'm not seeing any negative numbers. Core CPI was pretty much the same. So I don't see inflation declining that much, that they maybe not still be raising interest rates, but we will wait and see. I don't think we have an interest rate decision from the US until next month. So early next month, I believe, if I'm correct. I could be incorrect. I thought I heard the other day that we won't know unless there's going to be another raise right till next month. So it will come up on the calendar here. You can go and find when the next one is. I'm usually just plotting a week by week. So coming up, next important item is at 10:30 p.m., which is core PPI. Now, this is going to give you an insight into if the producer's price index is rising, so the people that make stuff, if their prices are rising, that means the prices selling in retail are going to be rising too, which of course is going to add to the potential of inflation. So if this comes out positive tonight, then that's going to be positive to US dollar, I should imagine. So that's coming out at 10:30 p.m. Okay. So with that in mind, it's going to be very difficult again just to take a trade when this is another item that's going to very much impact the data that we got yesterday. Of course, we moved up at least 100 pips yesterday once the CPI data came out. So it is hard going at the moment to be able to hold a position when these news items come out. But let's have a look. Now, this is the dollar index. I have been saying on the weekly chart here that we do have a higher top just. And we are potentially holding on weekly support here. We're actually testing it today. I mean, if we trade below this low, that theoretically puts this in a downtrend. So is this just going to hold and maybe stay range bound? Is it going to break down? Some pairs are heavily, the likes of the dollar franc, for example, today is heavily selling off. The euro dollar has pushed up, maybe 20 pips above yesterday's high. It's not really massively moving higher up. I think the pound's probably moved something about 30 pips up. We're not seeing a massive follow through from yesterday, whereas the dollar franc's definitely been moving down strongly. So watch the 101.28 level here. And where's it trading at the moment? There we are, pretty much at 101.28. So it's right on support here at the moment. All right, so we'll support hold. We got a bit fractionally short of it on the last test, and I thought this was starting to reverse back up. Maybe, that was the last push down, but of course we've had another push down at the moment. But what I am noticing is that whilst the dollar index has been selling, the S&P 500 had a very nasty day yesterday. Whilst it was positive at the start of the release, well, after the release, we got a reversal, and it was the same on the Nasdaq 100. Very nasty candle on the Nasdaq 100. So, are we topping out on these indices? So we got indices moving down and we got the dollar moving down, all in the same vein at the moment, which we don't normally see, but that's what's happening at the moment. So let's get to the pairs. Now, I'm not really seeing a setup because I'm having to wait for price to kind of settle and start to form structure that I can get my head around from the news items coming out. But we can certainly talk about levels, and am I seeing the potential of any patterns starting to form, and we can start to see how they may start to form over the next 3 or 4 trading days. I put some trades ideas out today on the Aussie pairs, which haven't worked very well at the moment because the job figures came out positive and then price shot up. So at the moment, let's just start. We'll go to the Aussie yen first because it's just in alphabetical order. I was thinking maybe price was starting to falter at the 62 level here. I was looking for a break below 89. just to start to confirm the decline. But 89, as I said, intraday, 89 intraday on the 15-minute chart was support when I did my analysis, and I was saying I'd like to see that break and then retest and become resistance. But soon after, the job figures came out and popped it up. Now we've popped up to the 79% level now. This is the 4-hour chart look. This is the day chart look where I've been discussing the possibility of a double top here. You could say it's getting mixed because we've got kind of a lower double top, lower top there, and a high bottom. And we're retracing all the way back up inside last week's trading range. So we've just touched the 79. So this, and there's a bit of area of resistance over here. There's an area of resistance here from that top. We're a little bit fractionally above, but there's this top just there, which is a little bit short of. So yeah, we're at the 79% level. It is worth monitoring over the next 24 hours how price starts to react up there, because we could just see a reversal down from that level. All right, so moving down to 15-minute, I was looking, price was here, and I was looking for a breakdown. And then I was looking for a breakdown below 89, and that to become resistance to move down. But you can see the big candle up there when the job figures came out positive for the Aussie. So I'm going to be watching this 79% level, but I'm not seeing that price is actually turning the corner up there at the moment. So it's just an area to watch to see whether you can see your setup maybe for a short if price wants to start to show its hand it's turning. All right. So I'm just monitoring that. Aussie. Now, it has actually popped above the 67.16 level. I was watching that earlier in the day to potentially hold, but we've popped above in the short term. We're only 8 pips above at the moment, so we could be back below it through the trading day. Now, we have a potential of a double top here. We've moved down to a lower bottom, and we're getting a bit of support from weekly support over here. We can't quite commit below it long term. But the structure here in the day chart is a double top to a lower bottom. Are we coming up to point in a lower top at some point here? All right. Now we could, by the end of the day, be back below 67.16. We're at 62 level at the moment. All right. There's also, this is a day chart top here as well. 67.58. Let me just double check. Yep, 67.58. So price could actually get up to 67.58 if it wants to continue rallying. But don't forget the trend's down on the day chart. This price action moving back up is corrective in terms of what the trend is. And we're at the 62% level here. So I'm just watching to see if we can maybe hold here and start to drift back below 67.16 at the moment. All right. I discussed the 67.16 level, so the 67.16 level yesterday while we were going through market liquidity. So we could go higher up to the 67.58 level, 79% levels up there too. That would be an ideal level to look, very high level. All right. So 2 levels to watch. Can you see a setup to sell, whatever your setup is? I mean, you could just be selling here at the 62 level, stop above the high up here. For a positional play, you could be waiting for the 79% to come around, just sell at 79, stop above the high. Or you're dropping down to a lower time frame to look for a setup. So whatever your setup is, what I would like to see this not, by the end of the day, close below 67.16, or through the day start to want to move below there, and then kind of see a reversal start to come around the corner. Not seeing the reversal at the moment. We're not able to. I was going to say we're not able to. We are actually at the moment. We're maybe starting to falter at yesterday's high. So when the news came out yesterday, we popped up, but then sold back down from 67.16. This has only gotten up really because of the job figure news, because other than that, this was rather weak after failing at 67.16. This impetus moving up here is from the job figures. So how much more can it move up before maybe it wants to start to move back below 67.16? All right, I'm just going to color it in. There's yesterday's new spike. So if it can't hold above, it starts to want to hold below yesterday's high there, then you could start to look for an opportunity, a setup to sell, because it can't hold that new spike. But at the moment, you can see there, it's maybe offering a bit of support at the moment. So excuse me a moment. All right, sorry about that. I had to blow my nose. 67.45 for rejection. Where's 67.45? Is that a 67.45? Oh, I've got up here 67.58 is the next day chart top. Not quite sure where you're getting 45 from, but it's just in the realms at the moment where it can be putting in a high, a lower top high on that day chart after last week's decline. So just monitoring. Euro pound hasn't got down to the level I've been watching, and it's coming back. It's coming up to day chart resistance at the moment. Has been getting good support along this line here at 87.54. At the moment, it is, euro pound can spend a lot of its life range bound, because the euro dollar moves up, the pound dollar moves up. If they're all appreciating it, if those two currencies appreciate at the same rate, the euro pound can't really go too far. So moving back up towards 88.28 at the moment, this may well just stay rather range bound. So at the moment, I think the trade to watch for would be to move up to 88.28 at the moment. If it comes up to 88.28, then watch for a reversal back down, and the lower level of support, a lot of supports coming in on the daily level support down here, 87.54. So that might be the two kind of boundary areas for that pair. So looking to trade up or down from those areas would be the code there on the euro pound. Now the euro yen is coming up to test this major high today. So I'm just sitting on my hands at the moment, like it's looking strong at the moment, but I'm not going to buy right now into that top. Now, if we have broken above this top, like long term, this top should become support. So this kind of double top area that we've broken above should be support. All right. So if you're thinking the euro yen's going up much higher for the longer term, it's going to drop to the weekly chart. We're obviously moving up here to the next major weekly top high here. We are in an uptrend here on the weekly chart now. Now we've broken above that previous high. It's worth noting that we are at, when you look at the big picture, we are approaching a significant area of resistance over here, which has all been formed from this area of support here. So it is just continuing up. It's very high up there at the moment. So what is going to happen at 146.72? Is it going to completely fail? I mean, it could fail there, and obviously there could be a trade set up at this level to trade down simply to weekly support here. And if that starts to want to hold, you need to get out your trade, and then you look for an opportunity to trade back up that way. All right. It's not the trader here isn't to buy. You should have been already in a bought position if you think this is moving high, because why buy a significant weekly top here? So let's have a look for our chart. For our chart, it's just an uptrend at the moment. It's not giving any clue of a change in trend. But we can all see that we're within 6 pips or so of that high. So what is going to happen over the next 24 hours to 48 hours at that high? It could move through. So you could watch 146.72 to become support. I don't know if I want to do that. It's very high up here. But, you know, if you want to buy now, you need to move through. You need to pull back then to become support to continue up. All right. I will just be watching to see how price reacts up there. All right, so it's getting driven up at the moment because I can see the euro dollar is still got a little bit of a bid on the day. So, you know, this is probably going to hit 146.72 any moment now. But we do know at these key areas, you know, when we hit this weekly support down here and we did trade through, we've reversed all the way back up. So it would not be any stretched imagination to see price hit here and then we trade all the way back down. This market is going to be clearly watched by the market, this level. So let's just monitor, see what happens. Now, if you want to be aggressive, it's hard to be aggressive at the moment because the news comes out at 10:30. But after the news at 10:30, if you want to be aggressive, you could look for a very tight entry, tight trend line break for a short. I mean, we could top out up here. We're at a strong level of support, strong level of resistance up there, okay? Euro dollar. Now, this is heading towards a level of resistance. I was maybe starting to want to hold at 110, but we've obviously, a whole bunch of stops may have gone off above here. So at the moment, we're trading, you know, around about 20 pips above the 110 level. So the day trend here is up. For the last 2 or 3 weeks, we have been trying to hold at that resistance level, but yesterday's news has pushed it above. So it is, you know, in a clear day chart uptrend up there at the moment. And it's heading towards the late January high at 110.33. Okay. So we're what, 13 pips away. So price could falter there. And notably a little bit above there at 110.75. Got it on the weekly chart, is the 79% retracement level of the yearly range. So in respect to last year's trading range, we are very high up. How high can it go? Maybe it's going up, maybe it's going to be going up all year, or is it simply getting up to the very high levels of last year? Is that dollar index going to hold at support? All right, so just be very aware where price is. It is at a very high level at the moment. It's not, for me personally, it's not necessarily at a level where I want to buy because it's just very high. And, you know, a very strong reference point for the market there at 110.33 and we're trading at 110.18. So there's only 15 pips to that level. That's maybe all that price has got to go up before it fails. So why would you be buying with the possibility of only 15 pips of room to go? All right, it's a question at the moment of if you're in a bought position from back in time, then you're obviously happy at the moment and you're wanting 110.33 to break to continually move higher. But that's because you've already got a good position, maybe positioned, and you don't have to worry about getting in. You're just worrying about where may I potentially take my profits. So if you are long, of course, you need to watch up here at 110.33 because if it doesn't want to start to negotiate and move through there, so 110.33 up to 110.75 if you're long, this is where price could stumble. All right, if you're not long already, it's probably too late to get long at the moment. Then, you know, you're just sitting to see what price wants to do at this area up here. I mean, it could fail up here, or we could be moving higher long term. If we start to have a good progression above 110.33 over time, we'll probably revisit 110.33 to become support. In the short term, though, this trend could still hold, and we fail at 110.33 in the short term. And the level to watch for support over the coming week would be a pullback to 109.27. You know, if this is going to remain in an uptrend and hold its strength for another month up, maybe into May, you know, we can't fail at 109.27 on a pullback. 109.27 will have to hold. Now, we were actually at or below that level before the news came out yesterday. So These are critical areas to watch when you're just waiting for some form of setup that you want to trade. We move to the 15-minute chart. See, this is where we were. We were actually below 109.27, and there's a very significant imbalance there created by the news event. I'm going to go through imbalances in a fortnight's time in the Wednesday webinar. Smart money concepts. Now, these imbalances will often get filled. So whilst this looks, and there's another imbalance formed today. There's a bit of one in here. So for those of you that know what an imbalance is, it's really just where price moves up and then the next candle doesn't retrace back inside the range of the candle before. And it kind of creates a very thin, an area where potentially the trading was quite thin. So then price will want to come back to that area to trade back inside it. So I can see 3 imbalances there at the moment to the upside. That potentially may need to be filled over the next week. So, and predominantly this big one over here. All right. So I'm going to be watching over the next week. Do we get a pullback to 109.27 and what happens there? If we can't hold there to continue up, this could be great buying here to continue up. But if we don't hold there, we could be then dealing with a reversal. This is the level to watch then for the potential for reversal. And as well, I would say the 110 level here, over the next 24 hours, if today we're trading above 110, but then into tomorrow we can't hold 110, the 110 is very high priced at the moment. So that, failure at 110 will probably see a price movement back down to 109.27. All right, so you could watch for a failure at 110 to trade down at such high levels. I mean, yesterday we couldn't get to 110. I think we just got to 110 there. And, potentially this could be a liquidity area here where this was a whole bunch of stops that went off on that candle. And we might start to see this pulling back towards 110. I know it's trading up as I'm talking, but it hasn't taken out that high yet there. All right, so if you want to be if you think, well, this is just moving up another 200 pips, the thing you could be doing is you could be drawing a fib across the impulsive move of today, and you're looking for a pullback within the fib range. Keep dragging it up as price maybe moves up, and you might find that over time a fib level lines up with the 62 level might line up with the figure, and then that would become maybe a nice level to trade up from. All right, but I don't know if I would like to, let's say we trade up like so. So we move up and we test that 110.33 area. I don't know if I want to trade a buy on a pullback from failing at that level, because it would be likely to, if it can't move through 110.33 and holds, it could then, trade back down to this area. So it's just a very difficult area. But if you're so obsessed about doing something to get long, look for a fib retracement. But be aware of, major resistance up here. So work out what you want to do. Of course, we can all see prices moving up, and we know we're on a day chart uptrend, but we're heading all the way up to that January high there at the moment, within 10 pips. Okay. All right, pound yen. Now, to the weekly, we're in this weekly range here still, a bit above the 79. And there's a larger range here. All right. But we're still within this range here. And there was the potential of a double top forming here, but we've obviously gone a little bit higher here. But I would just be watching at the moment. The area of these two highs. Do we start to move well beyond that level? All right. Or do we move back below that level? So 1600 is that high to the left. We're trading what, 60 pips above there. That's nothing for the pound yen. It can move 60 pips in 30 minutes. So, later today we could be moving back below 166. So I will just be watching this area at the moment. I know it's a 79% level of this range. What does price do? Can it gather strength to continue up, or are we going to fail in this area here? All right. Again, for me, if I think that this is the range that we're operating in and we're up at the 79% area here, this is the selling level area. When you're measuring the range and price is retracing back up within the range. So for me, this isn't an area where I'm going to buy because of the nature of where we are in the fib tool. So all I can do at the moment is just monitor price action, and I could see that this would be a great level for a failure if it starts to occur. Price isn't showing that at the moment, so just monitoring. All right, does that for our chart there start to turn to down? And do we have a move like so? Do we come back into the area and form a lower top, or are we simply continuing up? Just I don't like to be a buyer in these 79% areas. So we'll just have to monitor, see if it is moving up, or does it start to show a failure there? Just fractionally above last week's high. So it is at an area where it could definitely falter at. All right. Pound dollar heading up still. It's getting up towards the top that it formed last week. All right. And I just want to know where. Just want to monitor the range of last year, which is there. All right. 79% miles away at the moment, but I know the 62% was where that double top was. So that's the main reference point at the moment. Does this pair, because it was below that double top there before the news yesterday. So whilst we're above it at the moment, we're coming up to challenge the high last week at the moment, pretty much to the pip. I'm suspecting we will trade above there at the moment. Just at the moment, the key thing to be watching is, do we falter at that high? And the key level to watch, like on the euro dollar, over the next week is the level that we were holding at before the news of yesterday. Does that remain a support on any kind of pullback that we might get? All right, so let's put a fib on that high there. We're obviously moving back up within this range here. I'm anticipating we're going to trade through that high a little bit. All right, that's at 125.24. All right. And that says, well, exactly 125.25 by that high there. All right, so we're pretty much within a pip trading up there at the moment. But, just move it to the 15-minute chart, like I was just showing it on the euro dollar. We were actually down at 124. So we were well below the resistance level that the market was, not able to convincingly move above that double top area at 124.48. So the question is going to be, we will get a pullback, I'm sure, at some point over the next 2, 3, 4 trading days. All right, just looking at my own screen. Euro dollars almost traded up to that 110.33 level. We probably will get a pullback over the next 3 or 4 days. Nothing goes up forever. So, imbalances, there's a definite imbalance like on the euro dollar here that could get filled. There's a bit of an imbalance here. All right, and there's another imbalance. that's just a small imbalance, so that could well get filled today. So we obviously traded up to 125.25 last week, but then we couldn't hold at that high, and we couldn't hold above 125.00. So we're at high prices at the moment on the pound. It's not, that's not the level you want to be a buyer at. If the trend can hold, then I just want to know where that low is. 123.44. You could be putting a fib across that 4-hour range at the moment. And let's say we hold at that high today. So that whole range there is look for a pullback at the moment. If you want to trade with the trend, which is up, look for a proper pullback. Don't be trying to buy. Don't have this fear of missing out and going, I've got to buy because it's going up. So at the moment, we could start to fill those imbalances. The one at the top there will probably get filled because it's not that far away from price action, but there's one in here and this one here, more notably, and there's a 79% level there. This one over the next week could well get filled. And, if we can't move, we're pretty much traded to the pip up there at 125.25. We can't trade through there today. And we start to see failure moving back below 125. You may, over the next few trading days, see the opportunity to trade down from 125, depending on what price does. All right. Well, of course, price may just blow through there later on in the day when the news comes out, and then we're still continuing higher. And if you want to be a buyer, you really should still be looking for a pullback, because buying at the high of the move with the fear of missing out that's not a strategy. Okay, that's just trading with the fear of missing out. All right. All right, so New Zealand yen here, on the day chart is very range bound. I've been discussing the potential of a decline, this being the last major move, this being corrective, and it's kind of a 62% level. All right, there's a 62 level there. Now, at the moment, though, it's very choppy. I would just be monitoring the level that we failed at last week at 83.53 up here. Just price, because you can draw a smaller fib here across that range. 79% level is at 83.47. That resistance is at 83.53. So that would be an area I will just watch. Okay, if price gets up there, can move through there a little bit, could come up to retest all these 4-hour tops over here. What happens up here? That's what I'll be looking at. Price action at the moment there is very uninspiring at the moment on the New Zealand yen. So till it gets to a level where it will grab my focus, I'll just leave that alone. All right, New Zealand dollar. I've discussed the potential of this double top up here, which has turned the day chart trend down. We've broken the low there, got some support once more at the weekly level of support, 61.91. Now, it's by no means, this is probably one of the weakest pairs to the US dollar in terms of what's been happening over the last 24 hours. It's only just at the high yesterday. It doesn't seem to have a lot of bid in it, but you could be monitoring the range. You're looking to see if a lower top forms on the day chart to continue the decline. All right. You can see the 62 level overlaps nicely with the daily resistance at 62.94. So kind of the 63 area up there, 62.94 to 62.97. We've got a long way to go for this pair. That's 50 pips or 50 to 60 pips away. And at the moment, it's struggling just to keep above yesterday's news high. So I'll just be monitoring those higher levels. Can price come up to 62.94 to 62.97, pretty much the 63 level. There's another level there at 62.75, but it doesn't overlap with, well, it does overlap with the fib. It's the 50 level. I don't trade really at the 50 level, so I don't class that overlapping fib as any value other than the fact that the 62.75 level is a clear level that we found out pretty much all last month. So you would obviously potentially see a reaction there and a potential failure there too. But I wouldn't be basing it on the 50% fib, just purely a resistance level. All right, so monitoring a rally. Where can a rally finish? Just want to head back to the euro dollar a moment. So we've been a pip or two short of that January high. And the pound dollar. So you can see both of those pairs. The market knows, even if you're, I'm not aiming this at anybody in who's on the webinar tonight, but if you're just a dumb trader that doesn't know anything, irrespective of anything, you would be seeing that candle retrace at the moment. Now, you might not know why that's retracing, but the market knows why it's retracing, because there's a clear level of resistance up there. All right. Now, if you don't know it's a resistance level up there, you could just be thinking, I'm buying on a little bit of a pullback here because I'm seeing a little bit of negativity on a candle. And, you're pretty much buying it right at the top of the market at the moment. That's the top of the year at the moment on the pound. And, we're at the top of the year for the euro. So do you really want to be buying at the top of the year? And Slimy saying markets may start reversing after the news tonight, especially if the PPI comes above expectation. Yeah, well, it could come in below expectation. So I'll have to wait and see. Yesterday, the euro dollar was holding underneath its current resistance level, and then the news came out, and then it moves up 100 pips approximately. So we're at the next level of resistance right now. So if the news comes out negative for the US dollar again, we could be another 100 pips higher up. So we'll have to wait and see. It would be great, just, hypothetically talking, that we completely fail at these resistance levels and see a significant setup for a sell, because it's always great to be a seller at significant high prices. And, the euro dollar at the moment is at a significant high price. The pound dollar is at a significant high price. The likes of the euro yen there is at a significant high price. So yes, seeing a perfect setup for a sell over the next few trading days would be ideal, because we are at very expensive levels. But we'll just have to wait and see what happens. We may be seeing a continued uptrend. All right, where was I? Cover the New Zealand dollar. Dollar Canadian is testing a low area. Now, I actually thought after last week's move up, we were maybe going to put in a higher bottom, but we haven't traded up all week. We haven't been able to trade up above a high to form a higher bottom. It's moved up to this area of resistance and then simply trade straight back down. So I was waiting for a higher bottom to form, and then I was maybe going to start to think about engaging on that pair, but it just hasn't happened. So now the weekly trend is, it's a higher bottom to a higher top. And we're at the 79% level now. So, at a very good discount within the weekly uptrend here. I know we're having an outside week, but of the bigger swings, we're at the discount area of the big range there. Is this going to hold down at the 133.89, 79% fib? So this is just an area to watch. Do you start to see positive price structure start to form in the 4-hour chart in this area to move up? All right. So really, what I'd like to see today is maybe we get, like you were saying there, Slime, if we get a positive PPI figure tonight, then we may finish with a very positive candle moving up from that 79% fib area. Now, over the next week, though, if we can't hold here, then of course we could be moving down to this area. And then what happens down there? That's the next reference point if this area doesn't hold for the overall weekly uptrend. That's, it's still in play until that trend changes. All right, dollar franc. Now this has just been smoking down the chart at the moment. And normally in the area that we're in, so I might just take all my lines off this chart. Just so that we've got a nice clear chart. Normally when we're in this kind of area, there's that low there, there's this low here. This was a central bank thing that happened on a particular day where we spiked down, but forget that kind of aberration of a spike through. This 86.99, we're miles away from that level at the moment. Now, well, I just want to kind of show you that long term, this thing's just in some form of a range, isn't it? It moves from one end to the other. So we're obviously getting to the lower end. All right, and the key level to watch at the moment is this monthly low here at 89.26. And we've moved below that level at 90.84. 90.84 was holding for 3 months, and then we suddenly decided to break below. So all right, so we were trying to hold, but obviously this week we've suddenly broken down. So what's really happening here in terms of the mentality of the traders is all those that were buying here thinking this was holding for like a double bottom, triple bottom over here. Price is broken below and then they've gone, oh crap, I'm wrong. So maybe there's lots of large traders that were getting long and having to unwind some positions. And that's why we're seeing this significant follow through. All right, so just want to put in the monthly levels at the moment. I'm just going to be monitoring these levels. 87.57. We're obviously getting into deep discount within the range that this pair's been trading for many years. We're well below that 79% level at the moment, so that doesn't mean anything at the moment. But just be aware that we're in very low levels. We're going to continue with a downtrend long term. These two weekly lows here, 90.59. A rally back to that area for a sell could be an opportunity if we're seeing a continued US dollar weakness. But you can see that's well overextended. If we're talking about movements within the ranges, the downward movements, you have a movement down there, and then we have a rally. And we've probably done that projection, all right? So we've already done the move down from last time. So this is well overextended. So this is what I'm saying, don't go chasing these moves because they're overextended either to the upside or the downside. Or wait for price action to have a corrective move and look for a setup. Setup isn't just to chase the current candle low. Not in my mind anyway. All right, so 4-hour trends down. Those are the last two movements. All right, that was the last move down before rallying and measuring that down. I've just lost that. You can see we're very much at the 100% of the move that we had before the last rally. All right, so it's way overextended. So, what's your setup? Is it to sell the bottom of the move or wait for some form of corrective rally and maybe look for a short on the setup if it continues to move down after a rally, okay? So I would be dragging a fib along that range that we're currently forming and moving down. Keep moving it down if price keeps moving down, and then look to monitor the rally. All right. Right, dollar yen. All right, today charts not doing much to dollar yen in comparison to other things. Could be still forming this long-term head and shoulder pattern, even though other pairs to the US dollar, obviously pairs to the US dollar be moving up, but not that much weakness on the dollar yen. We're still very much positive for the week. This weekly low here, we're obviously having a headache at that level. But we are in an uptrend here in the daily. Of course, it was a negative candle yesterday, but it's structurally still in an uptrend. It is difficult when it's holding at resistance here, an uptrend. So the daily level, 132.99. So this daily level here, price is really not wanting to move above the weekly resistance, and it's getting support on day support here. So it's trapped between those two levels. So if I was looking for a pair to trade, I would just wait for this to sort itself out because it's just stuck. If your general perspective was this is moving high from the high time frame head and shoulder pattern inverse, and this lower one here, left shoulder, head, right shoulder, is you are on support here at the moment. So 132.99, so pretty much the 133 level, the last 4 or 5 candles here are all, any movement down to 133 is getting support. So you can see that's turning around at the moment. So 133 is support at the moment. So you can continue watch 133 intraday. If you keep stabbing down and reversing, look for your setup to buy. I mean, I'm not going to do anything before the news comes out tonight, but we've actually had a trend line break there. And you could watch for the next one, which would be there. And it's just showing you that potentially, yes, 133 has been support to move back up, to potentially come back up to test. You've got that rather large imbalance here that could get filled. And that would mean coming back up to test 133.62. So, you have to make a decision. Do you want to trade that back up? What's your setup to trade up from day chart support? All right, try and break that trend line as I'm talking. Now, Slav, you're saying Swiss is very expensive now, especially if you think about all the recent negativity about Swiss banking sector. Those problems haven't gone away and the interest rate isn't going down anytime soon. That's right. I mean, in terms of interest rate differentials on the dollar franc, it favors the dollar side rather than the franc. And with, yes, the problems that they've been having, you wouldn't necessarily think that the dollar franc would be moving down. You would maybe think the dollar franc would be moving up. So we are in terms of price to the dollar franc, we're at discount prices, aren't we, at the moment? It's getting heavily sold off at the moment. So, it's difficult. You can come up with reasons why maybe you should want to trade the dollar franc to the upside, but that's in a clear downtrend at the moment, and it's maybe the strongest one out of all of them versus, the US dollar in it. So you don't want to buy until you get a clear signal because it is looking rather weak at the moment. All right. Just want to see what the euro dollar is doing. And what's that pound dollar doing up there? All right, so we're seeing a little bit of a withdrawal. And what's that euro yen doing at its level? Euro dollar is actually above at the moment. That's probably getting pushed up with that dollar yen moving up. So a little bit of yen weakness coming in from the dollar yen cross to push that up. Of course, the Eurodollar isn't selling down too much, so that's helping that spike through that weekly top at the moment. All right, let's have a look at gold. Just continuing its movement up. 1998. Weekly resistance is becoming support for this now. So, you know, from a pure trading perspective now, you'd want to see that move above that high. You maybe want to see this move back to support and look at that area to be support to trade up. That would be the kind of structure I would want to watch for if I want to be a buyer. You know, this is 3 days up now from its last pullback, so it's not the best place just to buy. You want to buy a dip, so that would be nice to see a dip in that form if it could come around. We are obviously getting up here at very high prices on gold. So a lot of things are getting up, you know, those things that are moving up at the moment are getting at very high prices. So the very extreme prices of gold are at 2074 and 2070. We're only about 50 points away. So it is holding the uptrend. Are we going to see a test of those highs? To try and trade up to those highs, you know, try to look for a dip to form on the day chart there that you could buy at maybe support 119.98. All right, so my thoughts on the US 30. Let's have a look at the US 30. Where is it? It's actually in some form of an uptrend, maybe, but it false broke that high there to a higher high. So this could be a higher bottom. So it is looking a little bit different to, say, the S&P 500, which doesn't have a higher top. This has a higher top, but that could just be a false break. Weekly trends. See, on the S&P 500, the weekly trend is up, whereas on the Dow 30, it's not. So, you know, in terms of this weekly, $79 level, so a lower bottom. Are we forming a lower top to move down? Nice rejection yesterday at the 79, trading below that rejection candle today is a signal to short, really, isn't it? For a move down. The other indices on the day charts, like the Nasdaq, horrible rejection at the 79% level of the monthly range. There's the monthly range. So the Nasdaq, its lower bottom, possible forming a further lower top. Whereas there's that question mark on the Dow, you know, 30. There's a question mark. We don't forget the US 30 or the Dow 30, whatever you want to call it, Dow Jones. It's only 30 stocks. All right. Whereas the S&P 500 is 500 stocks, and the NAS 100 is obviously 100 stocks. So S&P 500, you see on the weekly, is in an uptrend, higher top to bottom, but there's all these tops here that it's fading at. So we could be putting in a lower top there at these tops. At the 79% retracement, the monthly perspective here on this one is lower top, lower bottom, already formed a lower top there potentially. So all those indices are looking negative, very negative candle there. Of course, the market's going to be waiting for the next data at 10:30. But it didn't, even though the US dollar sold off, the stock market sold off. So all those indices, they look negative, don't they? I know there's been some commentary. You've got oil here as well. You know, oil's moving up at the moment. That's just going to add to the burden of inflation. So whilst inflation ticked down on the figures ever so slightly, they got released. Oil keeps moving up. That's just going to have an inflationary effect back for the market. All right. So if that keeps moving up, that is going to potentially add to, you know, of course, trucking costs, you know, to move goods around the country. That's potentially higher prices. That's just higher inflation. So that moving up significantly just adds to the burden of inflation. It doesn't reduce it. This moving down clearly would reduce. So, you know, I know some economists are saying this is going up long term, and that's just got an inflation effect. You know, PPI, producer price index, producers producing goods, moving them out to clients. You know, if you're a wholesaler producing, shipping it out to a retailer, that just adds a burden to the cost, doesn't it? Warren, you're saying, why is there a big gap in oil? I think there was somebody told me yesterday, Slav, you told me yesterday, I think OPEC said something in through here, and then we got a big gap. I think a number of entities that produce oil have maybe come out and said that they're cutting back production, which of course increases the price, and we got a gap in there. I think that's what happened. All right. Go and Google it. I'm sure you'll find what it is. Slav's telling me OPEC meeting was, and SA and Russia agreed to cut production significantly. So that's what created the gap on the weekend. But it is at a level of resistance here. So that's interesting through here. And potentially, yes, Warren, gaps are like imbalances. Potentially when you get a gap up or a gap down, they get filled over time. So yes, that gap there at the moment, you can get, you know, on stocks, for example, you can get a number of gaps to the upside or downside, and same on futures contracts. When the exchange is closed and open, you can get a number of gaps to the upside or the downside before gaps are filled. But this only closes on the weekend, so potentially that gap could fill, and especially if we hold at this area of resistance through here. We hold at this area of resistance through here and start to fail there, then yes, we may top out up there, and then price will come back down to fill the gap. And you can see we're at 62%, fractionally above the 62% area of the monthly downtrend range there. So is it moving higher, or with that kind of production, or is that just simply put it up to the sell point? I don't trade oil, so I don't try to work out all those production things that go on with oil and how it affects the market. But technically there, you're at resistance. All right. So the market at the moment, difficult with the data released last night, with CPI inflation a little bit ticked a little bit more down than anticipated, only a fraction though. Of course, that's set the market moving up, pairs to US dollar. Now we're looking for a setup to do something, be it buy or sell. You know, but two pairs to clearly watch over the next few trading days, and we can obviously get back to these on Tuesday, is this critical level in the euro dollar, the yearly high at the moment at 110.33. We've been a couple of pips short. We might stub into that later in the day, but there's a number of imbalances there that could get filled back to the downside. Don't know if there's got any, have we got any more that need to be? Still a bit of one here that hasn't really got filled. Got it filled a little bit there, but there's still a bit of an imbalance there too. All right. And I can see some equal moves here at the moment as well. Like I was saying on the Swiss franc, there's a move up. So see how it's beyond the last move. It's way overextended at the moment. All right. So there are some imbalances there that could get filled. The one here, just to pull it back to support. If that can't hold, then there's this one here. All right, but this isn't a clear uptrend, so I'm not getting too excited about shorting at the moment. I would need to see some very clear price action that suddenly says, okay, short it. At the moment, I'm just not going to buy at a significant high price. Pulling back to support, does that hold? That might be a good level to look for long, depending on what the news brings over today. And of course, on the pound dollar there, it knows the importance of that high. It was the week before's high before we sold off quite significantly. So those imbalances to watch as well. All right, everybody. So a bit of a patience game at the moment. All right, next webinar will be on Tuesday, which is more analysis coming up next Tuesday, which is the 18th. All right, 7 p.m. Sydney time. Other than that, just watch for those news items coming out. Don't have that fear of missing out. Just be patient. Something will happen over the next 2 or 3 trading days that you can start to look at and get across to trade, I'm sure. All right, so be aware of the news items coming out. And with that in mind, thanks for your attendance this evening and questions coming in. And have a great weekend wherever you are. Stay safe. I look forward to seeing you next time.